So what we decided to look at today, last week, the VIX futures, and actually once the VIX settled down, the true level that we got to, in spite of what Jim might have said before, was 38. We're going to take a look and see how often does that happen and what happens when that happens.
Okie dokie.
Last week, a 3% daily drop in the S&P 500 was surprising. Let's talk about Monday. However, what stood out even more was that the VIX was trading and actually closed at 38. This raises the question of how often has such a scenario occurred? And we're going to look at it from a historical perspective and how significant it is. Also, how does this compare with the most recent VIX explosion and market correction in 2022? And we'll also take a look at 2020. Let's go to the next slide.
Okie dokie.
So since 1995, there have only been 5 periods when the VIX was trading above 38. So since 1995, 5 periods, Bat. What would have been your guess?
How many there would have been?
Yeah.
I would have probably said a few more than 5. I would have said maybe a dozen or something like that.
Surprising. I mean, we've talked about this before, so I would have said 7. I thought it was 7, but I guess that's going back to earlier than 1995. But I knew the number was less than 10. And it's really surprising when you think about it. Just, the main reason for saying this is to give some context around last Monday. The reason we don't spend that much time focusing at us because when you have 5 times in basically 30 years, right? It's something that's hard to plan for other than staying small. I mean, your one defense is staying small and keeping a little bit of short delta on. That's really it. But you can't plan for something that happens once every 6 years. Here are the statistics regarding the magnitude of market corrections and the highest VIX levels during those periods. Although the market faced significant challenges in 2022, with the SPX down 18%, the VIX never traded above 38%. So the 1998 crisis, which I think they're talking about long-term capital management, had the VIX at a high of 46 and SPY down 26%. The dot-com bubble, when it burst, that was 2001. Got the VIX to 45. The 2008 got to 81. 2011, the whole international debt crisis, it wasn't just Greece, got to 48%. And then 2020 coronavirus, we got to 83 with a couple of VIX trading firms also blowing out at the time. You can see some of the moves. I mean, the biggest move in the market was 2008, obviously. The other ones were relatively short-lived. The first thing that should strike you as attention here is that you're going to get to 38 and we were only down 3%. That's weird. The probability of the VIX trading at a level higher than 38, let's take a look. Since 95, the VIX has only traded at above 38 for 3.4% of the time. That means that the current VIX level is a very low, or the level last week is a very low probability event, which creates an opportunity. And you can see it. If you didn't have a lot of things on after last Monday, it's been a gift from the gods. I mean, it's,
of course.
Yeah. You can see the number of times we got above 80 in the last 30 years was 3. The number of times above 70, and then so on all the way down the line. The chances of us getting to these levels is crazy low, but it happens. So next we're going to examine how long the market has remained with high IV levels following the first spike of VIX. To increase the number of occurrences, we'll focus on the 35% instead of 38, just to give ourselves more occurrences. We got to get statistically accurate here. So we found that the duration for which the market maintains a high VIX has been decreasing over the past 15 years. I think that's just with the dissemination of so much more information and so much better technology and so many more players now and so much more money. And the exception of 2020, when really nobody really knew what a pandemic was. When we think about it and you kind of look at it here and you start to look at the duration, 2020 was, the VIX stayed high for 230 days. But other than that, in 2022 was 2 days. In 2015 and 18 was 2 days. 2011 was 93 days. You can see all the numbers. And this time was like 2 days, 1 day, something crazy.
A second.
After the VIX reaches the 35% level, the median VIX level during the following period of market volatility was 32%, significantly higher than the long-term average of 16%. This implies that the VIX can remain elevated for extended periods. So premium sellers should carefully consider their capital allocations with effective risk control as a top priority. That's, again, and that's why people didn't jump in with both hands last week. I jumped in a little early. I will say that.
People usually jump in with both feet, Sosnov. They dive with both hands, but that's neither here nor there. So they didn't dive right in nor jump right in, whether they use their hands or their feet.
The VIX trading above 38 is rare, and it can stay at high levels for extended periods. In the past 15 years, the duration for which the market maintains a high VIX level has been decreasing with the exception of 2020 when we were in full-scale pandemic mode.
What's
There you
your
go.
takeaway from this? You can't play for a 38 VIX, right? You got to keep things
You can't
business
play.
as usual. You
You
have
can't
high
play for a
implied
38
volatility.
VIX.
You got to hope for that contraction. Exactly.
Can't play
Very
for
good,
it.
sir.